Hopefully everybody can hear me. Afternoon, everyone. We've got a few more people in
Mm-hmm.
the waiting room lobby, so we'll just give them a minute or two just so they can join. Feel free to use the Q&A section of the webinar to introduce yourselves, and be good to get an idea where you're all calling from and you know, industry that you're working in. But yeah, we'll give it one more minute, so and then we can make a start. I've got my dog in here somewhere, so hopefully he won't make an appearance, although he is a bit camera shy. Shall we make a start, chaps?
Yeah, I think so. I recognise all the names on the screen, so
okay,
we're in a friendly place.
Okay, good. So hello and good afternoon, everyone. Thank you for joining us today. I'm Mark Cowlin. I work for PurePath Advisory along with Neil Campbell. And before we go into a short brief of introductions from Neil and Steve, I thought I'd introduce myself first and then pass the mic to the guys. We'll go to you, Neil, next after me. But for those on the call that don't know me and my role at PurePath Advisory, I've spent the last 25 years or so in professional services, which started in recruitment back in the early 2000s. So then I was busy helping finance and technology teams deliver transformation by providing individual interim professionals and teams across a variety of engagements for them. But for the last 8 years or so, I've been working in advisory. And out of those 8, the last 2, most notably, focus has been on helping businesses and finance teams, predominantly finance leaders, understand how ESG sustainability fits into their organization and transformation strategy, which is now becoming a little bit more of the norm. So with that, I think that's enough about me and my background. I'll hand you over to Neil first, and then to Steve. And Steve, you can talk about neoeco and what you do from there, and we can dive straight into why we're all here. Neil.
Hi, Neil Campbell. I'm also a fellow director of PurePath Advisory. I qualified as a chartered accountant many years ago and spent a lot of time in finance and within financial services, blue chip organizations, moving into transformation. On a webinar that I was on with some a few people from PwC, one of them mentioned that the big problem we have with ESG is data and reporting. And I thought, well, I've been doing that for a couple of decades. That's where I can add value. And that's coloured my view of what ESG is all about. And I've been left financial services and moved into this area probably 4 or 5 years ago and focused fully on that now.
Great.
Stephen.
Thank you, Neil. Hello, everyone. So yeah, my name is Stephen Pell. So my background is also in accounting. So I'm a chartered accountant. I also qualified years ago as a chartered tax advisor as well. So, and I spent most of my career actually in practice. The first part of my career was sort of focused mostly around compliance, audit, and tax. And the second part of my career really was building an accounting practice, building an accounting firm called Iconic. And we were sort of an entertainment specialist firm. We scaled to 3 countries. But during that, one of my, what really interested me and what drew me to that was technology. And we leveraged sort of the latest at that time. Cloud technology was exploding. So like Xeros and the QuickBooks, and I had a vision that I could build a firm remotely around the tech stack. Fast forward 10 years, exited that firm, and my new project is neoeco. Neoeco is a sustainability accounting software built specifically for financial professionals and accountants. And the sort of the genesis story of neoeco was a bit of a sort of a, I guess I would say a lightning strike idea between myself and my brother. Me being an accountant, super interested in technology, and my brother being an environmental scientist and a specialist in an impact quantification methodology called life cycle assessment. And he sort of worked with some of the biggest companies in the world, quantifying environmental impact and sustainability impacts, but mostly at a product level. And as we were sort of thinking about, well, what could neoeco become? This is when we had a wave of regulations. And not only the wave of regulations, it was the regulations and the standards that ended up as accounting standards or ended up in the accountant's workflow. And so we were basically building a solution that could bring the way that you quantify environmental impacts into the world of us accountants, essentially. But I'm sure we'll break into that as the conversation adapts. But yeah, I'll pass you back to Mark.
Did you say quantification methodology?
Yeah, so life cycle assessment is a way of quantifying environmental impacts.
Yeah,
exactly. Yeah.
Good. I'll have to do a bit more of a deeper dive on that. Yeah, no, appreciate that, guys. Thanks for that. So this year, there's been quite a lot of change in the world of ESG sustainability and a massive amount of demand, as Stephen and Neil will probably go into a bit more detail around data, regulation, the frameworks, what do they mean, you know, and how and where to get started. And one of the key things about finance is that they are now pretty much at the very pointy end of the arrow tip when it comes to transformation and that roadmap. So that's one of the things that we're going to be exploring a little bit further today. Before we get straight into this, there's a Q&A section. Hopefully that all works on the Teams on this webinar. Feel free to use that if you have any questions. We'd like to see them. We don't want this to be death by PowerPoint and just loads and loads of slides. There might be one or two, but you know, we're not gonna let that happen. We want this to be as interactive as possible with you guys, and part of my job is to step in and stop these guys talking too much. So I'm happy to jump in with any questions. I suppose yeah, look at it a little bit like Fiona Bruce does on Newsnight, but yeah, not so savagely in that respect. So as I said, there's been quite a lot going on this year in ESG sustainability, a lot of noise about the regulations and who's doing what, and as I said, about how accountants now are really at the forefront. There's the machine learning and the AI side of it, but data fundamentally is king. So, you know, how are you harvesting that and what are you doing with it? So, Neil, I mean, why don't we start with you, which is a firm favourite around risk, resilience and assurance. Do you want to kick us off into that?
Yeah, sure. I mean, you mentioned the data, and data is key. I've been in transformation for many years, and transformation is usually some regulation which requires reporting, which requires data. And so I think Stephen and I are so aligned on this with the importance of data. And it is about identifying and pulling that in. And that's whether you're looking at the environmental side, social side, or the governance and the risk side. So it is absolutely key. But I think what we're looking at now with the regulation is governments sort of taking a step back, but also in other cases, you know, jumping in with both feet. I heard from one of our member of the audience today mentioned something about the UK SRS. I wasn't aware. That is going to be introduced next year, but it's only for PI, public interest entities, and listed, and so it won't be mandatory even for the larger companies. So one of the comments that a guy from the government made was that we want to try and reduce the compliance burden, and that just misses the point of what we're trying to do with these regulations in enabling action. And all it is about enabling action. And then to the other extreme, we've got Spain, who have just introduced unilaterally carbon accounting starting next year. I don't know about the limits on any companies, but so far I've not seen any. And that is because they lost 400,000 hectares of land to fire over the summer. And so they've reacted very, in a positive way towards ESG, whereas people like, the UK are looking more at what's a vote winner. And so and we've obviously got the pressures from overseas. But in terms of business still see the risk involved in especially extreme weather events along supply chains within their own organizations. We were looking at an organization recently, they've got 27 properties around the world, and they've already started looking at what are the possible risks. And it's always the weather that they consider. In where that sort of, and I do have a slide on risk that I will share with everyone, because I think it's quite pertinent to where the world is going and where business is going. If I just share my screen, I will. Oops. This is the World Economic Forum, who are the guys who organize and run Davos every year. Every year they put a risk report together, and they ask about 3,500 global CEOs what their view of risk is over a 2-year and a 10-year time horizon. Now, the green risks are the ones related to the environment, biodiversity, etc. And over a 2-year time horizon, extreme weather events is already kicking in. It's number 2 on that slide, and pollution and the ability of people to live in various places. Over a 10-year time horizon, that from the top 10 becomes 5 of those become environmental. And that's quite a shift in not a very long period of time. And what that means is that the global economy is obviously going towards that viewpoint, and they will be managing these risks and taking action on these risks. What that then kicks in is that national economies have to follow the same pattern, which means local economies and local businesses also have to. But one thing that this pushes into is, with the regulations and the reporting, the pressures from geopolitics and other businesses, is that businesses understand these risks. They are taking over. When they identify these risks for their business, it's not just for a report, it's so that they can take action. And again, that action isn't just for the benefit of the planet, it's for the benefit of their own resilience and long-term future. And all of this means we now have a whole lot of people who are looking at our organizations. It's a hugely expanded stakeholder environment. And that comes from whether it's Section 172 in the Companies Act, which mentions this expansion of a wider stakeholder, or especially along the bottom of this diagram on the right-hand side, investors, insurers, finance, and advisors. All of them have a real interest in whether or not people are managing their risk properly. I'll stop sharing.
No, it's very helpful. Interesting to see that. There's a lot of moving parts to that. Steve, I don't know if you wanted to chip in.
Yeah, you started with the question around data collection, and I sort of just anchoring it back to why are we collecting this data. And as Neil mentioned, there's a load of different stakeholders that are sort of tugging at reasons why we need to collect this data and report across it. But I think, just to sort of reinforce what Neil said about there's a shift in the global baseline now. Essentially, there's a global baseline that's emerging. Should I say? Typically in the ISSB standards, IFRS aligned standards, and I think at the last count, I think it was over half the world's global GDP had signed up to sort of an economic variation of sustainability reporting standards. And that means that this is it's now imperative to making decisions around capital allocation, investing. It becomes a serious conversation for every single business, and it has a dollar or a pound sign in front of it, not just we're doing good for the planet. And obviously with that, we're not just looking at risks for the planet, as Neil said, it's the economic risks that are now at stake. And I think this is the standard that's emerged at the moment as a winner, that the businesses are sort of getting behind. We looked at a little bit of a failure of the CSRD, which is a Europe one, but this economically aligned one for the ISSB seems to be the one that people are starting to get behind. But that's super interesting for us as accountants because it's speaking our language. All of this is speaking our language.
Yeah, and you mentioned the accountants in the room, and you two are pretty well placed to answer this. Why is it now so important for accountants to grasp the nettle, on this, and why are they best placed to take this forward? Not just internally if they're in business, but if they work in a practice.
Shall I go first on that one?
Go first, if you want.
Yeah. Sure. Well, first of all, one thing that Stephen alluded to there is that businesses are taking hold of this, and something like 88% of businesses in the US, where the current administration said ESG is dead, people are just not calling it ESG, but 88% of companies are either looking to increase or maintain their level of investment in ESG because they've seen the fires in LA, they've seen the floods in Texas. These are real business risks to their own businesses. So you can't sort of collect this data and then ignore it because you're just then saying, oh, well, we'll just assume it's not going to happen to us. And it's unacceptable for any business not to recognize and manage these risks. And it's just data. Now, accountants deal with financial data all the time. They're perfectly placed to look at, reporting of risk and risk management. They've been doing that with clients for many, many decades. On council at ICAEW, there was a report recently that looked at making the profession relevant or keeping the profession relevant. ESG was the only area that has increased in importance, and it's risen massively. Everywhere else, all the other things have maintained their importance, but ESG has just increased hugely, and managing that data. And accountants are the people they trust. When it hits the fan, accountants are classed as one of the top level of people that they trust. So we've been in this area already. We know how to take figures, make sense of them and report them, and enable action and forward planning.
Well, so have the Big Four, haven't they? They've been there for, I think they invented it, didn't they? They've done very well out of it. And, going off piste a little bit. Steve, go on. Do you want to add to that?
This is a really interesting topic close to my heart. I think the relevance that Neil mentioned is an absolutely key one for accounting firms of the future to stay relevant. They need to wrap themselves around what good business is. Good business isn't just about profit. It's about being sustainable. It's about longevity. We're in a new world now, and this is one of the hallmarks of that. It affects valuation. Your sustainability credentials impact your financing, the interest rate on a loan, your insurance. It's every facet of your ecosystem now is affected by this. And a couple of other points. One, having been in this now for 5 years and going into it new at the start, it's accounting. It's absolutely the fundamentals of particularly what I've been building and the service line that I'm helping accountants to build is simply an extension of the skills that you already have as an accounting. As Neil mentioned, it's looking at risk, but even more on a practical level, it's basically like bookkeeping. It's bookkeeping, data quality, it's report generation, it's reporting cadences, it's making sure that you have an assurable, verifiable data set, the same way that we would look at financial statements. So, and I think that's one of the core things. I think that can sometimes get lost when accountants think about sustainability. Oh, it's this very abstract concept, but it's very, very close to what you actually already do. And then the third thing, which is probably the most important thing, is the opportunity. There's an absolutely enormous opportunity for accounting firms. In fact, I was looking into this and I was trying to quantify what is and just looking at the SME segment, forget about the huge companies that have got massive sustainability teams and consultants, but what is the value of the carbon accounting just as one opportunity segment and that all these consultants are taking up? I think it was around about $1 billion. So there's a chunk,
wow.
There's a chunk of revenue for accounting firms, and probably not all of your clients, but a huge segment of your clients that you probably don't realize yet are paying consultants, or are paying someone else to do this work for you without you realizing it. So I think, why would you not try and tap in to grow a revenue stream to something that feels so natural and familiar? And you're the trusted advisor. I work with accounting firms every day, and it just has to be a question to the client. Oh, who does your carbon accounting? Who does your SECR reporting, for example? Oh, it's a consultant. They charge 10K for this. But we'll do it for just part of your year-end accounts job. We'll add on a premium for that. It's so easy to absorb into your services.
That's absolutely perfect, Stephen, because what we find is that some clients are already doing this. Like one of the clients that we work with, they told us about one of their clients who provides one of the leading supermarket with a product, and they've just fitted solar panels on one of their factories. Now, they didn't ask for any advice or help from their accountant, but if you look, solar panels on a factory is a major capital purchase. If you bring it down to what it involves is spending a lot of money, investing a big chunk of money, but they didn't even ask their accountant for advice on that because they didn't know their accountant offered these services. Well, they don't at the moment. We're helping them set that up, but they do offer advice on capital purchases and tax and all those sorts of things. So it's not making it complicated. Keep it simple and bring it down to what it actually is. Oh, that's capital purchase. What you're buying and what you're doing with it is a bit irrelevant. So talk to your accountant about this, because they know this stuff already. And I think Deloitte's put the global opportunity at $12 trillion. And I think that's increased since then. But, it's just a natural place, I think, for accountants to move into, because it is spending money. It is introducing change, making efficiencies, looking at things like, supply chains, all of these things, and risk management. So, yeah, I've been a bit frustrated with how long it's taken accountants to get on board. And on council, one of the guys, he's KPMG, he's the head of UK ESG for KPMG, and he started one of his discussions that we had with sustainability has to be profitability. And they're not so much just go hand in hand now, they're intrinsically linked, and which means you also can't have this long-term profitability without sustainability. And the net zero census they've got about 2/3 of companies see an increase in customers, an increase in sales, and an increase in customer retention because they've set these net zero targets, because people are taking notice of those sorts of credentials.
Yeah. So I think it's fair to say that accountants, if you work in finance or you work in industry, you work in practice, accountants are, I said at the beginning, very much at the pointy end of the arrow tip, and it does come back to accountants, that data. So, if you work in industry and you've got third-party relationships and that supply chain is quite lengthy, and you're being asked for that data and you don't know where to start, it can become quite overwhelming for an organization to think, well, how do I put my hands on that data? And hopefully that data is easy for me to put my hands on, because that's another thing that I've got to add to my to-do list. So from an accountant's perspective, or a CFO or an FD or whoever, you've got procurement knocking on your door, you've got technology knocking on your door, IT, because now if we're going to go and implement a new general ledger system, we need to build in all these future functionality within the business. So the backbone is future proofed for the business as we go further and further down the rabbit hole. And you could probably talk a little bit about technology, Steve, in a second, but it does come back to finance leaders. It does come back to people in accounts, and accountancy is the hub, I suppose, for all of those things. So, you know, so where do you start? If you don't have anything in place, what's the first thing you do?
Well, I remember there was an ICAW event a couple of years back, and they asked, what are the first steps? And there were 3 people on the panel, and they asked them all of this. Every single one of them just said, well, just start. And I've adopted that as well. But there are 2 sort of streams. There's the just start, which is change your light bulbs to LEDs, you know, get people cycling to work, start looking at your waste, all these things, and recycling. But then there's the tomorrow's job is, where do we want to get to? What data do we need to start collecting? And this is Stephen's area more than mine, which is the data side. But it is just about having a vision of where you want to get to, breaking that down into manageable chunks, and carbon accounting is a great tool for that, because it gives you a figure, and accountants love figures. So it gives you a figure. You can then start to plan, well, what do we want to do with that figure, over what time frame, and break it down into projects and a program of work, and then a goal, which maybe you're going for B Corp or you're going for some other certification. But it gives you that framework around it. And I think that's the sort of way you look at it. Don't look at it, we've got to do this in 12 months, because that's, you know, unrealistic. But carbon accounting is a great place to start. And
before Steve takes the mic off you, I've got a little poll. He doesn't like a poll, you know. So I'll share that with everybody in the group. Hopefully this works. Bear with me. Okay, is that in the chat? Yeah.
It is.
So Steve, if you want to talk, just basically it'd be good to get an idea from the audience perspective, for our perspective, you know, for you guys as well, just where you are with ESG. You might not have started, you know, this could be a turning point for you. You think, you know what, this cause is definitely a bit of a jump start for us. So if you don't mind, feel free to vote away. And whilst that's going on, Steve, do you want to follow up on what Neil was saying?
Yeah, so I suppose I see it from a practical perspective, as in data and reporting. That's kind of the lens I'm looking through. So for me to get started in my lens, it's about, well, what data do I have, and what can I get out of that data? Now, accountants sit on probably the most trusted data source, being the ERP, the financial ledger data as well. And that essentially is like you said, Mark, the backbone of a company's data. And the reason for that is that a ledger technically touches every aspect of a business. And so we are creating, from an accountant's perspective, a closed loop, time-bound system for our data collection, and something that aligns to our other reporting cadences and reporting outputs. I think that's a really important thing to make sure that we understand in this sort of carbon accounting process, is that we are essentially reporting the same data that already exists and that we already report. We're just using it to calculate environmental outputs or environmental impacts. So I'd say that it might feel quite sort of quite difficult as a concept to know where to start with doing something like that. And this is where I think, Mark, you've teed up the conversation around technology as an enabler to sort of help with this process. And it's the way that I'm imagining it, you could do this work in spreadsheets. Essentially, at its very basic level, you're taking let's say a general ledger or an accounting transaction, or let's say it's an energy usage statement where you're measuring consumption, And what you're doing is you're multiplying that against an impact factor to get a result. And that result would be, say, like carbon or kilograms of carbon equivalent, whatever it might be, or tons. And what we're doing is we're counting that carbon within a business. So you could quite easily do that within a spreadsheet, going from A to B to C. And what we're doing is we're putting together these transactions to have a report output for your carbon emissions. We'll keep that at its sort of basic level, but we sort of report beyond that in terms of other environmental impacts. Imagine it's a little bit like if you're doing an accounts job in Excel, an audit job in Excel, you're putting this information together. It can be quite long-winded. There can be lots of data that you need to play with. There could be errors. And so software is a great enabler to be able to do that. And also it simplifies the whole process and takes the pain out of the time-consuming nature of dealing with huge volumes of data. And typically, if you think back to some number of transactions that your clients are going to have in their ledgers, it could be thousands or even tens of thousands of data points in that. And it's really, really important that you get a richness of data within your calculations to be able to report something meaningful, and also to be able to move the needle in terms of making decisions. And so that's why at neoeco, we use financial ledgers as the backbone of the impact calculations, so that essentially every transaction in your accounting ledger gets mapped to an impact factor and has an output, a quantifiable output. So once you have that data, then you can essentially, like you said, you can look back at hotspots, you can analyze against the different segments, you can benchmark your suppliers, so you can see who your highest impact suppliers might be. You can look at your biggest emitting account codes. If you track in your accounting system by projects or tracking categories, and you can basically compare different impacts per business unit or different projects. And when you start to get into this level of detail, you can really start to make decisions around that data, as Neil mentioned, because the reason why we're quantifying this impact is, one, there's probably a box that we need to tick in terms of a loan application or insurance. But actually, what all these people want to see is a commitment to change, as a commitment to improving. And what's important is, I think Neil mentioned it at the start, it's not about getting the best results from the start and going into every fine detail. You just need a starting point so that you can start measuring a trajectory. You need to be measuring data consistently in consistent out formats, and something that you as accountants can actually understand what's happening behind the scenes. You can actually go into the calculations that you're running and see, oh yes, I can understand why this calculation has been run. Oh yeah, I can see where this data has come to because I posted this in the accounting ledger. Oh, I can see how this then ties back to a cost center or a cost line item in my financial statements, and everything joins up and everything feels like it's a closed loop system between finance and sustainability, and that's the world that we need to get to. But I think maybe Neil, is there anything there in terms of?
No, it is perfect. And I do remember you did a bit of a video for us for one of our presentations where you had how to quickly do a carbon footprint. And I think the video was 90 seconds long, and not all of that was actually doing the calculation. Mike, should we get onto the poll results if you've got them?
Yeah, I was going to say,
Yeah.
Steve, that was really well put together.
Yeah.
I mean, if you want to show that demo, if it's 90 seconds, you can. I'm more than happy. Of the decks between you and Neil, I'll leave that open to you. But yeah, the poll while you're thinking about that. So, where are the audience on their sustainability and ESG program, or the other way around? So, clear leader really, as people see it as an enabler for growth and as a service line, which is great to see. Couple of people are looking to embrace that opportunity as well. So yes, it's interesting.
Take that down off the screen as well now, Mark, because all I've got is the poll on the screen.
There you go.
One thing I did want to add although there's the huge opportunity of this, we've gone into that to a certain degree, but in terms of that group of stakeholders, people are seeing growth in customers, staff loyalty, all those sorts of things, which are all bottom line results. If you're not paying recruitment costs, that goes straight on your bottom line, as with increasing sales, etc. But the other thing with ESG, you're looking at efficiencies where you can reduce usage to reduce carbon footprint, but that also means that you're using less, so you're paying less. So it's again a bottom line cost. Things like your waste. Some people start to look at how can we reuse our waste and then sell that waste. So again, they're looking at it from a financial perspective as well as not just, oh, well, let's do the right thing. But a bigger element is that risk factor of identifying the risks from ES and excuse me and G to your business and mitigating those risks to build a more resilient business. And that risk goes right the way through all of those stakeholders. People want to work for an organization with a purpose, but if you go into the more financial aspects, insurers, you will never find a climate denier working for an insurance company because they deal with real data. And what is happening, which we saw on the news in LA, people saying, yeah, we paid our insurance all these years, but they pulled fire risk and now we've lost everything. It's similar with business as well. You can't get business fire risk in LA, and actually in many states in the US, but in the UK, flood risk is becoming more and more common. People are starting to pull flood risk, or insurance companies are starting to pull flood risk. Now, as one guy, I went to Howden's Risk Summit, and the Risk Summit was all about ESG. And what one guy just said was, if you can't insure it, you can't fund it. Now, any financial agreement with a bank or a mortgage provider, there's an insurance clause in there. And if you lose your insurance, does that mean you lose your mortgage? If you lose your mortgage, can you afford that property? Can you fund it yourself? If not, is that the end of your business? So it's these risks aren't, 2 to 10 years. These are risks that are happening now because insurance are saying we can't afford flood risk in that postcode and that postcode. No. And you might just be in the wrong postcode. You might be halfway up a hill, but sorry, you're in that postcode. We pulled flood risk in that area. What does your business do?
Well, we got a question. So I'm going to pause, if you don't mind,
okay.
For a second.
Yep.
We'll come back to that. So we've got a question. So run a small practice. Where do I start with my own ESG? And then how do I offer ESG as a service to my clients? It's a good question. Where do you, it kind of goes
Stephen,
back to where you start.
I'll hand over to you.
Yeah, this is a really great question. And I suppose no one has all the answers yet. And I've seen firms do it different ways. One is to have this sort of standalone sustainability service that you sort of bolt on, almost like a consultancy wraparound that has some deliverables. But my favorite way is to essentially have sustainability or ESG as an extension of all of your existing service lines. So instead of seeing it as this separate department or separate deliverable, it becomes, oh, there's a sustainability add-on option to my year-end accounts job. Oh, there's I could build in carbon accounting into the bookkeeping service offering, or you can build in, as Neil mentioned on tax planning and capex planning, you could build in an offering. And I'm a massive fan of 3-tiered pricing. So you could almost have like a gold, silver, bronze, and in the top plan, you have elements of sustainability built in as a differentiator within your service.
As a value add service.
As a value add, yeah. So there's different ways to do it. And also you need to understand which clients and which segment of clients are going to be interested in this. And the only way that you do that is by having that conversation.
Yeah.
But from what I've seen work with some of the larger mid-tiered firms, is that they're starting to think about it as an extension of their audit service offering, or as their year-end accounts or outsourced business services service offering. It's part of that package, and it's a value add driver at the moment. When I was at Iconic, my accounting firm, which was a very small firm, we used to work with entertainers, and we used to do a lot of like tour accounting, tour management reports, and I used to give every single one of my clients a report, a sustainability report, whether they liked it or not. And that became culturally part of the service. And then it became actually more interesting for them as a discussion point than the financials, because they understood sustainability and impact more than they did about their financials. But then it became this differentiator, and it became something that then if I gave something away for free, a simple baseline report, then you can start to build advisory around that and start to charge premium services. But there's different ways to do it. I like to give something for free, and because clients are not going to like it if you take something away like that, and then build towards a more valuable all-round ESG or service consulting offering.
But is the quick and simple, easy way to do that then, just to get started, is it using a piece of technology? Start with technology.
Yeah, so for example, something like neoeco is a great segue. But something like neoeco is, I mean, the way that I would recommend getting started is to have it as a one-page report in your if you do management reports or year-end accounts, have it as a either monthly or quarterly one-pager that goes with your management accounts or with your year-end accounts pack. And then it becomes something culturally embedded in what you do. And then your clients will start to have tons of interesting conversations around it. It opens up all sorts. It opens up Pandora's box, to be honest, when clients, because they don't know that you can do this at the moment. But it will start to open up conversations like, oh, can you help me write this policy? Oh, can you help me do some planning around, our costs, electricity cost, our CapEx spend? Can you help me? I need to report for this PPN, or there's lots of other services that can sort of be built around that. And my favorite thing is, like I said, these three-tiered service offerings. You can start to build a really good, good, better, best plan around sustainability linked to your core service offering.
I think you've touched on a couple of other areas there, Stephen, is the governance and communications element. Mm-hmm. That governance it's not just about your risk management and how you do it. It's about how you are taking it seriously, and does it go into your board level meetings every month or every quarter? And then your communication is telling people what you're trying to do. I think that question also includes an element of how do we get started? Because a lot of accountants I've spoken to, they don't feel that unless they're doing it themselves, this is something they can offer, because they've got to understand it better. Accountants don't like not being the expert in the room, and they're not in this area yet. So I would say, as an accountant, they probably start with your own carbon footprint, have get a good understanding of that, but don't then think, right, we've got to go to B Corp before we can offer it to clients, because there's one firm who did that, and they started a while ago, but it took them 3 years to get to B Corp. And we're starting to run out of time for this, because stakeholders like banks, insurers, etc., are starting to ask the questions. Supply chains don't want this risk, so you've got to start looking into this stuff now. But sorry, Mark, I know you want to jump in, but it's talking to the clients and telling them what you're doing.
Okay, no, that's good. Sorry, I did want to ask a question very quickly, and then we'll move on. If you're not in a practice, let's just say you're in industry, again, the same question to both of you is technology an enabler initially? If you work in local government or non-for-profit, I don't, I'm just putting it out there.
Well, I'd just say LCA to Stephen. life cycle analysis. It's absolutely perfect for supply chains. I'll pass that over to you, Stephen.
Yeah, LCA is a super interesting area, but I think I would just sort of say for any accountants in industry, I think there's an opportunity here as well. You need to put your hand up and be accounted. I think one of the things that I'm seeing is that organizations seem to think that they need to create sustainability departments and teams and bring in sustainability consultants, where, from what I've seen, all that you need is a good accountant to grab this by the scruff of the neck and run with it. And so I would encourage anyone who's an accountant within industry, once you've upskilled yourself to an extent where you feel comfortable. I think, as Neil mentioned, I think you don't have to wait till it's perfect, but just to upskill yourself to understand some of just the terminology and what you need to do. It's not particularly complicated. Then I think raise your hand to leadership and step forward and say that I can do this. And technology will really help you. It's simply like accounting. With technology these days and with AI, which I'm sure we're going to talk about in a minute, it does a lot of the heavy lifting.
I'm really impressed it's taken 47 minutes to mention AI. I don't know who put a pound in for 47 minutes, but it certainly weren't me. But yeah, we will talk about AI in a second. But yeah, just to top and tail of that. Yeah, sorry, I'll carry on.
Yeah, I think it's, with the use of technology, it's not that much of a heavy lift. It's not. I think there's a misconception. There's a lot of extra work landing on someone's plate, and you could do without it, whether you're in industry or in practice. But the reality is, it's not. With technology, you're basically, and I'm happy to show you, within 3 or 4 clicks, you can get to an output. But I think, Neil, you mentioned it, that credibility piece, particularly for accountants, which is why we should own this.
Yeah.
Consultants don't look at it through the same lens that we do as accountants. That credibility piece is so important. And so you need a software solution or a solution or a methodology where accountants control it, where you can understand exactly what's going in, where you're controlling the inputs and the outputs and the analysis, just like you would do with your accounting ledger software. And that's what neoeco has been built around, has been built to do. Whereas other solutions see it as a way, you give us the data, we'll hold on to it and do something with it, and then we'll give it you back. And that's not how us accountants like to work.
However, you did touch on one point which accountants hate, but it's really big in ESG, is don't let perfect get in the way of good.
Yeah. There
are no checks and balances with ESG. There's no double entry. And unfortunately, with a carbon footprint, you can get a quick and dirty carbon footprint just downloading the P&L, applying some factors, and out pops a figure. And it's a starting point. But accountants don't like that, having estimates in there and not having a figure that they can, goes through an audit process and everyone loves it. This is all about action. As a guy, the ex-president of ICAW, what he said about accounting in itself is, it's not an end in its own right. It's a mechanism we use to enable our businesses and our clients to make better decisions. It's exactly the same with ESG. And although the data can be a bit rough and ready to start with, you've just got to go with what you've got and look at where you are, the baseline, and the data you have. Use that data to start making some decisions about where you want to get to and how you're going to get there. But accountants have to almost have a change in mindset of perfect is just going to hold me back. You've got to take a bit of a bold step.
Yeah, agreed. And there was me thinking that we can talk a little bit about regulations and frameworks, and it's really dry for the next 10 minutes, but we're not going to do that. I think we'll leave that. We'll go straight into AI. The thing about machine learning and AI, it's everywhere at the moment. As you know, my kids on their phones, it's everywhere. Everywhere you go, it's not a case that you can bypass it now. It's pretty much autonomous, shall we say. So I can see the reasons why companies are embracing it. I really can. There's, whether you like it or not, it's not going to go away. So back to you, Stephen. I'm just conscious of time. We've got 10 minutes. There's a couple of things that I want to get into this last 10 minutes. So the whole AI, machine learning, automation thing, yeah, I mean, it's a big deal, right? And it should be harnessed in the right way by accountants and people that work in that data field.
Yeah, absolutely. I mean, we want to make life as easy as possible for ourselves, and we want to be able to maximize any commercial opportunity with the services we deliver. So we need to find efficiencies. Plus, in sustainability, as we are in accounting, we're dealing with so much data, huge streams of data. But there is a particular way that we, particularly in my building of neoeco, and also, as Neil kind of mentioned, this LCA AI solution that we are prototyping at the moment as well on a sort of a product level. It's how we're thinking about it and making sure that it can be trusted. That it's that key word. It's how can we trust the AI? But I just want to give you a few examples of how we would use AI. It's more like an assistant on steroids, essentially, rather than this mythical it can solve anything type solution. We use AI in neoeco to structure data files. So you're going to have data in all sorts of formats. Let's say energy usage statements for one company will be in a different structure to another. We want to just be able to chuck that into our tool, and it structures the data and puts in the exact outputs that you want and takes the data that we need from it. That is a time-saving tool. So that's one way that AI is quite smart. Writing up the data is another way that we use AI. So taking that data and writing it into the ledger, using AI to automate the calculations. Within neoeco, you can kind of think about what we're doing. It's a little bit like bookkeeping. So what we're doing is we're trying to find your a data point that matches to your accounting transaction, rather than going through and having to manually map a transaction like you would do in cash coding and bookkeeping. AI could do that. So I'm sure AI can do that in accounting as well, but we've built something for sustainability whereby it will rush through and do all of that really, really quickly. And also we have we use AI in an open source capacity whereby it reads sentiment and conversations on the internet and does a real complex analysis and benchmark of sort of a sentiment analysis across conversations. We use that for double materiality assessment module as well, but that's just some of the ways that we use AI for neoeco. In our LCA tool, Circular AI, which is essentially it's an AI assistant for creating models of data. You can almost model anything. You can ask this AI in a prompt, and it will spin out. So you could ask it, create me the environmental impacts for an iPhone 14 or 17 or whatever it might be. And it will do an input-output model at each stage of the process for building an iPhone. And at the end of it, it will spit out, well, this is the impact for creating an iPhone. That sort of fast data generation is where we need to get to. Fast, more granular data creation is where we need to get to as a profession in accounting and sustainability, but in a trusted way. So we do that in an ISO, I can't remember what the standard is, but in an ISO product format to do that in a way that we can understand. But in every step of the way, you need to have a human in the loop. You need to have an accountant in the loop checking the data, and you need to have, in this case, an LCA professional in the loop, making sure that it's not spitting out rubbish.
There's a reliance on the data as well, Stephen, where you can having it in a format that you can use, and it will, it's accessible, and that's a key because, as you said, you bring in data in, and every transformation program I've been on, is the big issue has been getting the data out. So it is really important to have that, so you can report on it. And one thing I did want to say in this is that the sort of four rules that I live by is: one, own it. Don't just respond to requests from banks and supply chains and stakeholders. Own it yourself and produce this data, which is exactly what you've said. The other is keep it simple. Make sure that if you're getting too complicated, you're probably trying to do too much too soon. keep it relevant. There's no point looking at the effect on some tribe in the back end of nowhere when it's not relevant to you. Keep it relevant to your business, because it's your business that you're looking at, and then make it actionable, because without action, this is just greenwashing if you're reporting the same stuff over and over again.
Okay, thanks for that, Neil. Appreciate that. Okay, so we've got a couple of minutes, and I just want to ask one last question to both of you. Just give me a minute from you both to answer it. But for people on the call and people that couldn't get on the call because we had a few technical issues, well, we live in the modern age with technology drives everything. Everyone will be getting a copy of the recording. So when people leave today's session, what's the one action that they can take away from today? Who wants to go first? You've got a minute.
Well, I would say take one action.
What is it?
That's exactly it. No, any action you take to improve your business in terms of environment, social, or governance is positive action.
Yeah.
And then start looking at the data behind it. It's keeping it simple, but starting today. One thing people are starting to ask of this stuff for this data and a plan now, a net zero plan or whatever plan. If you haven't got that and you go for a tender, you'll go to the bottom of the pile.
So get planning.
So get started on it. And if you're, by the time you come to get the first request for this data, if you're in your second year, you're set.
So
but if you're just
planning,
if you're cobbling something together, it will, planning and taking immediate action. Yeah.
Steve?
Yeah, I think I agree. The one action that I would take would be, if you're an accountant in practice, there's obviously commercial opportunity bubbling here. Have a conversation to validate that in your mind. So have a conversation with a client, or and just try and open up that door, open up that dialogue, and really ask the right questions to them to find out how they're, you might have to ask a few times and in different ways to get to the answer. And then I think for someone in industry, it's that professional opportunity to put your hand up and say, we can solve this internally. This is something that us as finance should be leading and managing with, and having those conversations with the leadership team to say that. So I think that would be my next action, as Neil said. That taking action would be have a conversation.
Good. Well, our conversation's been really good. It's been really enlightening. I've enjoyed it. And you two behaved yourself, which is good. Not to have to butt in too much. Thank you, everybody that managed to get on the call. I've had a lot of messages say couldn't get on the call, and that's just my error setting the webinar up. There will be a copy of the recording going out to everybody. If you've got any questions or you'd like to come back and talk to Neil, me, or Steve, let us know. All right, and thank you so much for joining us today.
Yeah, thanks everyone.
Cheerio.
So.